Good evening, traders. This update is for January the 10th through the 14th, 2011. Starting off by looking at gold futures real quick. We're up 6 points in the Sunday evening. It's around 10:23, and you guys currently know I'm long ABX. When we came down to test our 1352 support area right here on Friday, that's when I started scaling in. I bought more contracts, so I'm long a total of 15 contracts right now. I provision that we could see 1385 if we get some strong buying on the open. I want to see 10 points before 9:30 a.m. tomorrow, and that's when, if we get over 1378 and hold, we could potentially push to 1382 half and 1385. That's where I'll look to start scaling at a majority of my position. Crude oil's trading up $1.29, almost 1.5% in the after-hour Sunday session. We had a leak in, I believe it was the Alaska pipeline, which is causing demand to spur the buyers back into the crude markets. And we're also at the 50-day moving average on the daily chart. So 89.03 is our inflection point. Mark that on your charts. We're above the 50 on the 1 hour chart, which is also looking good. So right now we're bullish on crude. Jumping right into the action, looking at ACAM, we had a bullish engulfing pattern 3 days ago. That's right after I took my long on the back of the 46.72 support area, which led us right over the 48.62 where we're consolidating. If we could get a move up tomorrow and get over the 50-day moving average, I think we could get 50 half out of it, which led us below the 20-day moving average, and we're currently holding below 53.82. With the move above it, we're going to try to get back up to 56, or if they could even try to sell it lower to 51 half, which is right where the 50-day simple moving average is, and it is the gap fill. Apollo reports tomorrow after the bell. It's going to be very interesting. As you guys know, we currently follow this stock very actively. 39 is that gap, and if we beat on earnings, they're going to most likely gap it up between $40 and $41 a share, and you will wake up Tuesday morning if they beat after the close tomorrow, which is Monday, and you will see analyst upgrades coming through. That's where we'll look to get long at the best price we can with a stop around 39, and our targets will be 1, 41, 44, S2 will be 43, and then we'll eventually look for a move over up to 46, which is right around where the 200 is. Now if we miss, it's the total opposite. You'll see analyst downgrades. We'll look to get short with our stop being just a little bit above the 39 gap down high, and then our support will be the 50-day moving average and eventually move back down to 34. And whatever happens here, it's going to reflect on the entire school sector. So we're looking at Coach right now. Retailers really got slammed over the last 2 weeks after the holiday seasons. Hype was over. 52.90 is a nice level off the monthly chart, and we're flirting with it right now. With the move back above Thursday's high, we'll probably start entering a long position as long as the market holds firm and as long as it doesn't sell off, and we'll look for a move back up to the 50, or if we do sell, we'll look to get short and have the 52.90 as our resistance level, and we'll look to approach the 50 half, which is right around the high from the ending of September. Cisco, I'm proud of all of my followers who are getting long around the $20 level, maybe even up to 25, but now don't be greedy. You got the gap fill of 20.96. All the easy money's been made. If you want to hold some of the house's money on the table and put your stop right under the 50-day moving average, that's acceptable, but don't let it go all the way back on you without taking any profits at all. And if you do hold it, maybe you can get a move back up to 22. Gilead, it still has a declining 50-day moving average, but we did get a close above the 220 over the prior week. For all the bulls out there that are anticipating a upbeat earnings report coming on January 26th, you might want to start looking into scaling in a long position. But if we cross back below the 220, I wouldn't be very bullish on this, and I'd just look to hold flat until you get the earnings report on the 26th for further guidance. So right now I'm neutral unless we get and hold over 38, which is right around where the 200 EMA is. Goldman Sachs, which is usually a market leader, has had an amazing run again over the last week. Now 171.14 is a prior high dating back from November, and we've actually tested it 2 other times before breaking out. We want to see us get back above this level to get some more buying and eventually test the 185 high. So we want to see when we approach the 20-day moving average, some buying, and maybe even get back down to 165. That's if the market drifts lower. Then I'm sure there will be some other investors that step in. Looking at Mosaic, they both reported, them and Monsanto reported last week. I think a lot of the numbers were already baked into the earnings report when you saw this big heavy move in early to late December. So I wouldn't be surprised if over the next 2 weeks we traded in a range and eventually drifted to the 20-day moving average, or at least to the 73.5 level. Owens Illinois, which is symbol OI, is another one that's had an amazing move. So for all the bulls out there, 30.67, which is the high from July, you may look to start scaling in again, especially if we hold above the 20 and get some decent volume. Because if you're looking at it from a long standpoint, a lot of the up moves did come on strong volume, and the down moves came on light volume. That all indicates that the buyers are more in control, and the price action has been very bullish. The 20s not only have crossed above the 50, but the 200 EMA and SMA. So overall, this thing still does remain bullish. PCL, another one I'm proud of everyone who got long right on this gap trend breakout. This downtrend breakout. They consolidated right above it. 38 was the level to get long, and now you see you're riding it up with the house's money. And for all my day traders out there, put an alert at 39.55, which was Thursday's high, and if we hold above that and consolidate, look to get long for a move up to 40. But I think if you're looking to get long this thing, it's about to run out of steam probably over the next week and get some short-term selling in it. So just be neutral, and if you want to take a day trade, you could probably get some decent money out of it. All right, this week we also have Lennar reporting on Tuesday. Toll Brothers had another really fantastic move. We caught almost a point in it. Now we're right to the 200 EMA, and if Lennar does beat on Tuesday, we could probably get up to the 200 SMA at $9. I don't think this is the time to be getting long this. All the easy money's been made. RIG's had a pretty big move. Now they completed the gap fill of 75.36, and we did make another higher high and a higher low. So I don't like the news on RIG. They could come out any day and say that they had a bigger impact on the BP disaster than expected, and that could cause the stock to plummet. So right now I'm just on the sidelines, but it wouldn't hurt my feelings if you guys got long. I'm sure you guys have a different thesis than I do on this stock. So right now I'm currently just sitting on the sidelines until this whole disaster thing evaporates. Anyways, VALE, another big move. We're consolidating above the April high of 34.75. It would be healthy if we came down to 33.50. That's where I'll probably look to get long and have a nice tight stop below the 33.75 low, which was December 27th, around that time. Western Digital holding above 32.49. They could be putting in a head and shoulders pattern right here, with this being the left shoulder, the head, and the right shoulder. So if we get below this level with some heavy volume, maybe you want to start taking a short and start drawing your support lines. Or if we hold above it and eventually get above the 50 and the 20, right above this 34 area, we could start drawing some higher resistance lines. And also note that the 20 is about to cross below the 50, and we don't want to see that because that determines a bearish moving average crossover. Whirlpool, we want to see this hold above the 200 over this next week, so we'll be watching this one closely on the daily. If we get a close below the 200, some institutions could start taking some profits, and we could see the 8250 level be tested fairly quick. CRE's bearishly consolidating under the 68.82 resistance area. We couldn't quite break above it to retest the 72. So if we keep going lower this week, we're going to look for the 200 SMA to be tested around 64. LVS, as a day trading perspective, keep testing, setting your alerts at prior highs, which Friday was the high of 50. And we had called that when we broke out of this downtrend. So now our next target will be at 52. So like I said, keep setting your alerts at prior day highs and just take it for a day trade. For us to get long this stock, we want to see it consolidate a little bit, maybe retest the 50, and then we'll start to get long again. We also, overall this next month, for us to remain bullish, we want to see the 20 cross back above the 50. And Kramer, just to mention, he is bullish on the casinos. MHS, still looking bullish. We're still holding above 61.40, and we're above the 50-day moving average. So short term, we're bullish on this stock. RIM's had a nice move again. We were looking for buying. We got that this last week. Now, let's not ignore the clues. This could be a left shoulder, this could be a head, and this could form a right shoulder. So if we get some heavy selling on big volume this week, if you're a day trader, try to catch these moves. And also, if you're an investor and you're looking to retest this prior high of 64, set your alert above Friday's high. You want to see heavy volume, and you might want to get long with a tight stop below it. For your move up to 64, and then eventually start drawing your higher levels for resistance. US Steel, amazing down move. This was nice. I didn't catch it, but let's not ignore this entire up move right here. Came on declining volume, and then over here we put in this lower high, and that's all the shorts needed to start piling and taking advantage. You started seeing stops triggered, and that's what caused this sudden influx of a move in X. We have this uptrend going on right here. We're below the 20-day moving average. So if we break the 56 and hold below it, I wouldn't be surprised if 54.5 got tested over the next 2-3 days. And on the contrarian side, look for a test of the trend line to bounce off it and try to make some easy coin and retest the 20 around 58. However you trade this, it will be in play this week. FCX is holding up at the 20-day moving average, consolidating. If the market declines this week, I think that 107.50 will be tested fairly quick, and that's right where the 50 SMA is as well. So we're also watching FCX very closely this week. And the last one I'm going to point out is TZA. Now, if you are a bear, it wouldn't be a bad idea to start scaling into TZA. It's pretty low risk here. And even if you want to use it as a hedge, if a lot of your portfolio is long, you could use this. The options are cheap on it. I'll just take a look at it. Anyways, good luck trading this week, guys, and I'll keep doing the intraday videos. Have a good week.